Hi guys, welcome back to my channel. And today on this in this video we are going to do something really different. In this video we are going to do the analysis part of a dashboard. You must have seen across YouTube various tutorials on Power BI, right? Like what is Power BI? How do you import your data? How do you make this kind of visualization, that kind of visualization? How do you format this data? How do you make these changes? How you write the tax queries? Okay, that is all the things that are important. But what is more important is what comes after that. For example, you have made a dashboard, right? You have made a dashboard looking at a YouTube tutorial. Now what? You will just go to your GitHub link and just repost it saying that I have made this query, or you might go on LinkedIn and say that I made this dashboard by myself following this YouTuber. You will tag that person if he's on LinkedIn. Okay, you might do this, but there is no learning here. Why? Because data analysis is not about just making dashboards or using tools like SQL and Power and Python, right? It's about analysis. What is the word? What is the job role? It is data analysis. You are analyzing data. Your job is not to make dashboards. Making dashboards, running SQL queries are part of your data analysis. Okay, it's like the 80-20 rule. The 20% of the work of data analysis is the writing SQL queries using Excel, Power BI, Tableau, and other tools. The rest 80% comes from deriving insights from it, analyzing it, finding our observations, verifying them, and using those insights to make better decisions in the business, right? In the very layman sense, this data analysis helps in just one thing. If I had to drill down and just give one important reason, that is to make decisions, right? The main job is not to make dashboards or write queries. Its job is to make correct decisions. With this thought, today I was not today. I was learning Power BI from quite a few time. Like I guess it's been 3 to 4 days that I've been learning Power BI, and I thought I should also do one thing that before making a dashboard of my own, I should go on YouTube and see a tutorial and try to follow it up. Now you may think that I also did the same thing what everyone else is doing, right? But no, my reasoning was different. I did it so that I could learn how to make charts and how to make dashboards because before that, I didn't know anything about Power BI. I used to think it's very complex. It was equivalent to a cockpit of a plane, but it was not. It was easy. I mean, not that difficult, at least to me. So that's why I followed a YouTube video, and I will paste the link of that video in the description from which I uh, followed this and made this dashboard. That YouTube video also has the dataset from which I made this Power BI dashboard. Okay, so before we do the analysis part, let's first look at our Power BI dashboard, whatever I made. So here is the topic, which is we have done the churn analysis of bank customer data. Okay, we will talk about churn and banking churn in some time. Before that, let's see the dashboard that I made. Here are some donut charts. Here we have column charts with a line clustered on it. Okay, here I've made some extra visualizations that I will talk about later on in this video. And here is the table. I mean, yes, this is the table that we had. Initially, this table was not this beautiful, to be honest. Like this table held churn status in terms of 1 and 0. We replaced its values to churn and not churned, respectively. Similarly, the active status was also 1 and 0. We didn't have age groups, credit score groups, or account balance groups, right? We didn't have this product. It was just 1, 2, 3, 4, 5. We replaced it with product 1, product 2, product 3, and so on. Okay. And after that, we also saw that this schema here, which makes it easy for us to understand as to which column connects with which column of the table. Okay. Now coming back to our main dashboard. So yeah, this is the dashboard I had made. Now let's jump to the main part, that is churn, the topic of our today's dashboard. So what is churn? Churn refers, in very simple terms, churn happens when a customer stops using the product or service of a company. within a given time period. For example, you are the owner of a local grocery store. Okay, you have a regular customer named, let's say, Ram, and that customer comes twice a week. I mean, twice a month. Okay, because grocery shoppings are done generally twice or thrice in a month. So let's assume that this person Ram comes twice in a month at your shop. Okay, now what happens is Ram comes to your shop regularly for let's say 6 months, and you're very happy with him. You give him regular discounts, you give him extra quantities of groceries items, and for let's say there are some special items which gets sold out quickly, but for Ram you specially store it for him so that he may buy it later on. Okay, you give him loyalty benefits. But suddenly one day what happens? Ram stops coming to our shop. It's been 1 month since he has not come to our shop. Right? At one point of time he was coming twice, and it's been a month and he has not come even once. You might think that he must have gone on a vacation, right, with his family. But with this hope, you just sit calmly and serve your other customers. But another month passes, and with time, another month passes, and you see that Ram has stopped coming to a shop. Now, here, the you have churned. Here, Ram has been churned. It means that Ram has stopped using the goods, has stopped buying goods from your shop, and stopped using your services. This is churn in easy terms. I hope you understand with this analogy. And in terms of banking, churn happens when, let's say, you close your bank accounts. You have a savings account in your bank and you close it. Okay. Or for example, you stop using your credit cards. Stop making any transactions from it, or you have stopped making any kind of, let's say, electronic transfers or UPI payments from your bank for past 6 months. Okay. Or simply you have just moved all your balance from one bank to the another. Okay. This is what banking churn means. Now, why churn analysis is important? You must have seen across everything on YouTube, on GitHub, on any kind of data set that churn analysis is a very important topic which is considered in the field of data analytics. Why so? Because one of the major reasons is that in any industry, be it banking, finance, or e-commerce, customer acquisition cost is a huge cost that the company has to bear. Okay, and especially in bank, acquiring a new customer is 5 to 7 times more expensive than retaining a customer. That is why retention becomes more and more important. Also, banking profits come when you build long-term relationships. Okay, for example, if you are with a bank and if you are a loyal customer, then there are chances that your bank may give you some loyalty points, benefits, your credit score may get improved. Okay, these are hypothetical situations, but this is what loyalty benefits mean, right? And churn analysis also becomes important because if churn increases, then the bank has less deposits, the bank is not able to upsell more of its opportunities, and the costs also increase, like the marketing costs and operation costs. So even if a reduction of 2 to 4% of churn is very, very huge for the bank, right? And also, if a high net worth individual churns from the bank, then it is a huge revenue loss for that bank. Okay. Now, again, bank churn, why it is a serious problem? We have discussed it because it may cause loss of revenue. It increases the cost. Bank loses the future interest income that it might have earned on the loan that it provides. Okay. Now, with this analysis, the problem that I'm trying to solve here is to identify the reasons or to see the patterns and trends that occur in this company's data. Like, for example, for this bank, how churn rate exists, how churn persists through age group, through country, what are the demographic differences, or what are the income differences which are causing churn. So these are the things that I'm trying to figure out from this dashboard that I had created. Okay, so this is the like the introduction of churn, like what is churn, how we go about it, and the meaning of banking churn, why is it so important. With this, let's now deep dive into our dashboard. Okay, so the first page is actually a very basic dashboard that I had made because I had just followed it from a YouTube tutorial. And after that, I took some time. I read the data again. I saw that there are some more visualizations that can be made. I thought about it, and with some experimentations, I made another page of dashboards, which is this one. This may not be that beautiful as the earlier one, but we will see both the pages and analyze one by one whatever uh, uh, whatever the results that we're able to find. Okay, so first, the very basic things that we have total data of 10,000 customers, and out of which the churn rate is around 20.37%. If you can see in the top right corner, there is a gauge. Okay, this is one type of visualization in Power BI, and it's a very beautiful visualization. When I learned about it, I was really excited that it looks so good. Like it looks like a speedometer on a two-wheeler or four-wheeler, right? So it looks really good. And here we have to set the minimum churn rate and the maximum churn rate along with the target churn rate. Okay, so for this industry, for banking industry, a churn rate of 14 to 17% on an average is good. Okay, it depends from types of banks. For example, if you have NBFCs, then a churn rate is usually lower. Or if you have credit companies or communities, then the churn rate is different. For a particular typical bank, the average churn rate is at around 14%. I've assumed it for 14%. For this bank particular, the average churn rate might be different. Okay, and now, this churn rate of 20.37% is actually really high. Okay. If you think about the reasons, okay. Now, before going into the analysis, I want you to think as a bank, as a banker, okay, as a manager of your closest branch of a bank. Okay. For example, if I talk about myself, uh, my bank account is in Federal Bank. Okay. And I know the manager of my Federal Bank for a very long time because my entire family's bank accounts are in Federal Bank. Okay, my father's, be it my mother's or my brother's also, all of our accounts are in Federal Bank. And since the day, for example, I was eligible, let's say when I was eligible to have a bank account, since that day, my bank account was made in the Federal Bank and it is still there only. Okay, now, one possible reason that may explain why my father likes Federal Bank or my particular branch of Federal Bank is because they provide good engagement, they provide better customer services, or they provide uh, better upsell opportunities, right? So these are the reasons which might keep a customer engaged and retained. Okay, now if you think the opposite of it, right? For example, the bankers are not engaging, the cashiers are not engaging, the products are not that good, the interest rates are either high, or the conditions for, let's say, buying an insurance or any other products or taking a mortgage are very ambiguous, then these may lead to loss of customers or loss of retention. Okay, and in banks particularly, retention must be prioritized. Why? Because as we had discussed earlier, the acquisition cost is really high. Okay, now if we see the overall, you can see the donut chart that the we have active status, which is around 50% for both non-active and active users. Then customers by gender is also almost same. But if you see the customers by credit card status, then that's different because uh, around almost 75% of our customers own the credit cards, right, of the bank. Then if we see by country, then France has almost half of our customers. Half of our customers are from France. The other one fourth is from Germany, and the other one fourth is from Spain. Okay. Now let's see here one more thing. If we go to our second page here and see this data, the average credit score for churned and non-churned customers, right? Now here is one important observation you can make, that the average credit score for non-churned is 652. We are taking the approx values, and for churned customers, the average credit score is 645. Here we see that the values are very close and differences do not exist a lot. So we can conclude that credit score is not a primary key factor that drives churn. Okay, basically what I'm trying to say here is that customers are churning not due to their credit worthiness, but because of their experience with the bank, their dissatisfaction with the bank. It is just a supporting signal, but we cannot base a huge conclusion out of the credit scores. Okay, if we see the cards just below it, which are the average balance for churned and non-churned customers for average bank balance, then here it is huge. And another, it is huge, first of all, the difference. And second, that it is very counterintuitive. If you see that the average balance for churned customers is much, much higher than for non-churned customers. Okay. Now, this reason, the reason might be that since they have greater balance, they see that they might be migrating to better banks. Okay. They might be sensitive to fees or the service quality. And this also indicates that there is a premium customer dissatisfaction. Why premium? Because the average bank balance is higher for people who have churned out. Okay. Now, if I were a bank, what actions I could have taken? Okay, if I think in this way, then first I would think about improving my relationship with these people who have high average balance. Okay. And one more thing that I can do is to, and since I've already churned these people, I have not churned, like already these customers are churned, what I can do is for the non-churned customers who have average balances little lower, I can provide them loyalty benefits. Why? Because retention is important and it should be kept in the mind all the time when the analysis is done. Okay. Now, with this, I will try my best to retain the non-churn customers with the lower average balance by giving them loyalty benefits and try to predict the early churn alerts for the people who have a higher average balance. Okay, the prediction can be done through machine learning models or like the banks have their own methods, right? We do not have to go into the depth of it. I might go into the depth of it in future when I change my career roles. But for now, I would like to stick to these observations and results only. Now, let's look at one more thing. If you see this middle column chart, the customers and churn rate by product, you will see one stark difference here that product 1 and product 2 have the maximum customers, whereas product 3 and product 4 have the least customers, but their churn rate is very much high. If you see for product 1, I will see if I can zoom it. Yes, I can zoom it. If you can see here, then then the churn rate for product 4 is 1, which is equal to 100%, and for product 3 is 83%, which is actually really huge. Yes. Now, the possible reasons can be that the customers are not able to adopt with the product 3 and 4. They might not be able to understand what these products are, or they might find these products expensive. Again, if you see the churn rate, and we have around zero point 0.1 custom. Okay, what is this? If I float my mouse here, I can see that we have around 60 customers for product 4. Okay, I will have yes. Here you can see that we have 60 customers for product 4 and all of them have churned, which means that this product is not good. There are some problems with this product and some changes might have to be made. For example, there is poor value proposition, there is no USP, and it is poorly communicated to the customers. Like, for example, there is a credit card which is launched which provides you gift points. Okay. Now, for example, a middle class man who is from uh, let's say who comes from an area where the literacy rate is low and he might not understand what gift points are, or that person does not shop online or does not go to malls. Okay, this kind of person will not understand the point of having a credit card which will give him gift points. Rather, he would like to have a credit card which will give him discounts or cashbacks, right? So this is one example that how poor communication. So this is one example about why a customer will not purchase a product from the bank. Okay, another reason can be that the products 3 and 4 are complex and buggy. They are not poorly communicated during onboarding because banking products are something that have to be explained by the salesperson from the bank. Okay, because at times the products and the services that are given are kind of complex. Okay, so there can be poor communication from the bank itself only. Here, the possible actions that I would take here would be to do some audits about the product 3 and 4, like what changes can be made, what are the problems here, and if possible, I would like to bundle the product 3 and 4 with product 1 itself, right? And also we can do some kind of A/B testing here with features, with prices, and asking customers their feedback with the products, understanding the customer sentiments. Okay, these are the actions that we can take here. Hmm. Let's see another chart here. If you see the left hand side line chart, that the sum of balance of credit score groups. Okay, here if you see that the for the credit score group of 600 to 700 and 700 to 800, we have the maximum amount of balance here. The majority of balance is concentrated on uh, this in these two groups, and we have very low balances in the other groups. So here what we can do is for the mid credit customers, we can say that they're most active financially, but for the high credit customers, they might usually change banks. Okay, and again for the low credit customers, they have limited capacity, right? Because otherwise why would their credit scores would be that low? Okay, I think I'm not able to think about some possible action here. What we can do here is we can increase the engagement with at least the high credit score people and also with the low credit score groups, so that they understand the products of the bank better. And at the same time, I would also target the middle groups for upsell. For example, there is a possibility that the people from these two credit score groups might not be interested in products 3 and 4. So I will try to upsell them the products along with products 1 and 2. Okay. Okay, now we are done with this. If we look more than, I guess I'm not able to identify any more uh, insights here. Okay, actually, while I was doing these charts, I found a very interesting analysis, I would say. Here, if I will go to the page one and see for products by customers by country, then here you will see that France has almost 50% of the customers, and Germany and Spain have the close to 2,500 customers. Okay. Now, if you go here and see within this chart, I will zoom and show. I hope it is visible, right? Like I'm not coming into the screen. Let me check once. Okay, it's visible. Hmm. Now, if you see here that the churn rate in Germany is the highest, it is 0.32 or 32% amongst the other countries. And if you use this slicer that I have added here, if I will select only Germany, okay, I have to do this. If I select only Germany, then another striking fact here you see that the average balance of churned and not churned is very high. It's around $1,20,000, which is huge. It is not the same for other companies. If you see, if I will deselect everything, if I select France, then for France it is so low. It is just 70,000 and 60,000. And similarly for Spain, it's also really less. It's around 90. I mean, for Spain, it is much lesser than France as well. This is one striking thing that I noticed while I was doing these visualizations. And I think the possible reasons for here might be that in Germany there are better banking opportunities, like by better banking opportunities, I mean better products. The competition might be high. There is a huge amount of segmentation in Germany. They are targeting specific groups of customers. That is why they are losing customers so fast. Their churn rate is so high. So to decrease the churn rate in Germany, the services and the products provided by this bank should be competitive, should be better positioned, should be better marketed, and yes, I guess like with these three things, they will be able to do better, right? Yes. Now, if we see, if let's go for the first page, the chart on the first page. Here you can see for let's analyze this chart, the customers churn rate by age group. Here you can see the churn rate is highest in ages 51 to 60. Okay. Here you see that these people are old basically, right? And they might not be that adept with technology. On the other hand, if you see customers with the age of lesser than 30, their churn rate is very low, which means that they are able to adapt better banking with the banking app. They are able to understand everything about, for let's say, how to check their account balance, how to send how to do an NEFT, how to check their CIBIL score, how to check their credit scores. They know how to navigate through different options in the app. But for the old age people, which is around 51 to 60 age groups, they are not able to like switch between the options or the areas of functions in the app of the bank. Okay, so I guess the UI should be done better, or a different app should be made for elderly people, and personalized support should also be given dedicated to this age group 51 to 60. Also, they might also be changing banks because of their experience, right? For example, for a very long amount of time they were involved with one bank, but due to market competition, another bank gives them a better rate of interest on their FD. So they would obviously transfer their bank account, transfer all their balances from one this bank to the other one, which gives the higher rate of interest on their FDs. Okay. Uh, Similarly, if you see this by credit score group, we had already seen persons with less than 400 credit score are with the highest churn rate. That is why I guess their churn rate is, I mean, their credit score is so low. And if you see by account balance group, we had already seen this, that people with low account balances and people with less credit scores are more likely to churn. So more focus should be given to them while onboarding them. Or for example, if loans are given to these people, then they should be given at a little lesser interest. This can be done. Or what else? What else? Let's see. Hmm. So if we even look closely on these two charts about customer and churn rate by credit score and account balance groups, then here we can also derive some more reasons, right? Like if I think, then see, if we think in terms of loans, then people with less balance and less credit scores are rejected for loans because of their probab lesser probability of, or let's say their higher probability of defaulting. Okay. Also, these people have limited financial capacities, so they might also have very infrequent transactions with the bank or through UPI. Also, they might be using really, really basic services like, for example, just to deposit money or to transfer money, and not the higher grade products that the bank has to offer. So I guess with this, and also one more thing, if we, I have also added a slicer here for churned and not churned. And if we select this, then we can see the differences here, that if you see this, this donut chart, that customers by active status, the inactive customers, this brown part is the inactive one and the yellow part is the active one. The inactive customers are have a higher chance of getting churned. Okay. Also, here in this donut chart, we see that females have a higher chance of getting churned. Here we see that people who own a credit card, they can also get churned. And here we have already seen the condition with Germany, right? So these things can also be considered in a bundle, that if a person is inactive, has a credit card, is a female and is from Germany, then there is a high probability, high chance that this person will churn from the bank and stop using its services. Okay. And this table actually I had made to differentiate between people who have product one and who are churned and not churned. Okay, so basically from this we can identify that 50% of the people are using product one, and out of that 36% are not churned, which is a good identity indicator that this product is good. Similarly, for product two, you can also see that the not churned percentage is really high. That is also one thing which is important. Yes. So I guess with this, I would like to end this video, because these are the analysis, this analysis, these are the things that I've analyzed till now. And I guess this much analysis is important for a company to improve its products, improve its value proposition, and do better customer segmentation and just target its customer better. So, uh, if we have, if I had to summarize this entire video, then I would say that customers with low credit scores and low balances have higher churn due to low engagement. That is something that we had already seen. They might be also sensitive to the fees, and they are limited access to meaningful products, like they are rejected for loans. Okay. And customers with higher age groups also tend to churn a lot. Customers are dissatisfied with product 3 and 4. Emergency audit should be done. They should be bundled with product 1 and 2. For Germany, special segmentation and targeting should be done. For old age people, the UI should be made better. They should be they should be given personalized or dedicated support. Okay, so these were the so for my concluding statements, like which I had already given, I would say that this was an amazing video, and I got to learn a lot from this. I was able to think in the terms of business about how a bank might take decisions based on the dashboards that I made. And I would like to give special thanks to the person who created the YouTube video from which I copied this dashboard, the page one dashboard here. And by reading this data, I was able to get inspired to make some better visualizations and overall make a complete analysis and the aftermath of how a bank might take decisions based on this data set. And this is not just for the bank, even for the data analyst, it is important to convert this numbers, to convert this data into meaningful insights so that the person who is sitting at higher positions, like your CEO or your manager, might get influenced by it and take better decisions. Okay, your job is to communicate these insights to people who do not understand them easily. Okay, that is why we use tools in SQL. We do not do data analysis by using the tools. We do the data analysis by using the tools, by finding the insights through the tools. Okay, so basically what I want to say is you should learn about gathering business insights, framing the problems, and breaking these problems into simple steps, and then trying to gather observations is very important. This skill is something that not all business analysts or data analysts can do. And if you master the skill, it will take time, obviously. It would be really good for you. And I'm also discovering how to improve this. I do not have any direct sources, otherwise, I would have obviously provided you with that. And with this, I would like to end this video. I believe it's a lot for today. I've done a half an hour analysis on this on these two dashboards already, which I guess it's really huge for anyone. Like anyone can see this video and understand how they can also make better decisions. Okay, one pro tip that I would like to give you is to use AI tools like ChatGPT and Gemini. Like I would suggest these two tools only for uh, understanding the KPIs, understanding the specific industries. For example, in this we were analyzing the churn of the banking industry. Okay, so before this, like I would tell from my personal experience how I approach this. Before making this analysis, I went to ChatGPT and Gemini and I wrote what are the basic general observations in banking churn. Okay, and there are some general observations which are common to all the banks. Okay, with this, when you read this, you are able to build insights with that. Like when you read it again and again and think from the perspective of a bank, you yourself will understand that okay, with this problem, this can be solved like this by gathering this kind of insight. Okay, I hope I'm clear enough to make you guys understand what I'm trying to say. And I hope you really enjoyed this video because this is something that I've never seen on the internet and tried my level best to do it. And at the same time, it is improving my skills as well. And you are also learning a lot from it, I suppose. So, with this, thank you and happy learning. Keep trying to upskill yourself and work hard.